this is what we are doing in our due diligence. We're making sure that the value of that asset supports the debt that we're purchasing. So even if the market corrects itself and home values go down a little bit, it's not going to go down to the point where you're going to be upside down on this loan, right? And to your point, the debt is still the debt. We're not necessarily going to adjust that or modify that.
Welcome to the Share the Wealth Show, where minority professionals can learn to escape the racial wealth gap and catapult themselves into abundance. Your host, Nicole Pendergrass, grew her net worth from being negative to multiple six figures. Join her on her investigative mission to expose secret strategies of the wealthy so we can all have the tools needed to build the life and legacy we were created to possess. Now it's time for the show.
Hey guys, so we're back again. This is the second part of the episode with today's guest. I need you, if you have not heard part one, go back to the previous episode and listen to that first, and then come back and join us here today. But you're not going to want to miss what they already said, because then you'll be lost with what they're about to say. But in any case, you don't want to miss you need to hear the whole conversation. This is why we split into two parts. There's so many nuggets. It's so juicy. Go back and listen to the first part.
Your next question was, what would some of the benefits be of purchasing a non-performing loan? And it's really that, like, especially if you're in the physical property stage of real estate, and you're having some challenges with picking up distressed properties or being able to get inventory at all. A non-performing loan can definitely be an option for you. But then also, if someone is looking for passive income opportunities, and maybe the stock market is a little bit too volatile for you, maybe the cryptocurrency market is a little too volatile for you, because those are two of my better examples of a more passive paper income type of strategy. But this is actually secured by a hard asset. So if either you're looking for an opportunity to potentially pick up properties under market value, or even just looking for a way to protect your investment so that it's still a passive opportunity, but you're not constantly checking the stock market to see where things go up and down and where you fall, and not even having any security for that asset, then I would say that those are some of the top benefits for non-performing loans.
Yeah. And then even with performing, if you want to be passive, you don't want to deal with, the non-performing or going through foreclosure or any of that. Even with that, because even if house values go down, the payment on the loan is the same.
That's the same.
They still owe it. Even if they have less equity, they still owe that payment.
Yep.
Right. So that, and at the end of the day, even if it goes down temporarily, real estate generally is going to go up over time. So regardless, by the time your loan is paid off, you will have some more, equity, and you still have the payments and stuff there too. So
and even with performing loans, this is what we are doing in our due diligence. We're making sure that the value of that asset supports the debt that we're purchasing. So even if the market corrects itself and home values go down a little bit, it's not going to go down to the point where you're going to be upside down on this loan, right? And to your point, the debt is still the debt. We're not necessarily going to adjust that or modify that. I mean, maybe in certain situations, but you're still secured by the value of that property. So exactly what you're saying, you're still compounding and you're still making a profit. And in my opinion, performing loans are perfect for a retirement account, like an IRA, or even a self-directed solo 401k or self-directed IRA, because that's already a set it and forget it type of strategy where you technically can't even touch that money. So if I'm now investing in assets within a self-directed IRA or solo 401k, and all of the profits are now going back into that account, this is more of a tax play, but depending on how that account is set up, whether it's a Roth 401k or even a Roth IRA, all the money that's going back into there is going to be tax deferred until you're ready to take that money out. And if it's set up, this is not necessarily tax advice, but just some insight. And if that account is set up for at least 5 years, if it's an IRA, then sometimes that money can even be tax-free when you're ready to withdraw from it. So there's a lot of strategy and just going into sharing the wealth and how we really not only obtain wealth, but actually keep it and grow it. That's another strategy and another option as well. So performing loans and compounding your profits and interests, great opportunity, and even non-performing loans and being able to either pick up properties or at least purchase debt way below market value is just, and all of this was just mind-boggling to me. Like, okay, why hasn't this been shared with more of our community? Because this is really a wealth play. Like, this is really how you compound.
Wow. Okay. And we're running close to the end, but I have questions. Okay. So, all right. One thing that came to my mind, and really quickly, in your experience, either with you or if you've helped other people getting into this type of strategy, what's an example of like a really killer deal that somebody did? Like either they got in for a lower amount, got a huge ROI, or just what's like a great example of like a deal that just stands out to you?
Sure. So I do have a couple, but I'll share one from a deal that I'm actually still involved in. So I do work with investors who are looking to get started in note investing and don't necessarily know where to start, what to do with the note once you purchased it, all of these things. So I do joint venture with investors who are looking to get started and don't necessarily either want or know how to do it on their own. Okay, so this particular deal that I'm going to be talking about is with one of my JV partners, where we were analyzing a note. And when we were analyzing this note, it, for all intents and purposes, looked like a non-performing loan on paper, right? Like, I mean, we're looking at the tape, we're doing all the due diligence, where everything is looking as though, especially the information from the seller, all of it was looking non-performing. So we went into it with the idea like, okay, we're going to purchase this loan. We understand that it's not performing or the borrower isn't making their payment. So we'll have certain areas of recourse once we close on the note. However, even though all the information was looking as though it was non-performing, there were certain indications to me based on the information that we received that it was actually more of a performing loan than non-performing. Long story short, once we closed on the loan, we got it boarded with the servicer, all of these things, it turns out that that the borrowers had actually been making their payments the whole time. It was just a lack of record keeping or better record keeping on the part of the seller. So how this was good, or how this was like a kind of a hit out of the park, is because since I was aware that it was probably more performing than non-performing, instead of bringing this to the seller's attention and potentially generating them wanting more for this note, we actually paid less, or we paid more towards the closer to the non-performing price of this loan. Then after it closed and we went through all of the process to get it onboarded, we recognized that they were paying. So initially we paid much less for a loan that was actually performing than we would have. So that's I guess, star or check number one. But then number two, they're actually continuing to pay, and they've been paying ahead of time more so than they were doing before. So the return on investment is actually continuing to increase. I can't even give you what those full numbers are because we're still in the deal, or we're still in the investment. But what really stuck out so much to me is having the understanding to know when to go back to the seller and ask certain information, but then also having the ability to recognize like, okay, we can actually get a way better deal on this asset than maybe we've initially realized because of the information that we know. So that is to be continued, but you're still making money off of that. And again, we got it for a really good initial price. So
wow. And that's crazy that you would own a note and not have good record keep. I mean, I guess that's not too crazy.
I
It's
mean,
everything with people is all over the place, but you're not keeping good records. So what if he had started a foreclosure process, assuming that these people had not been paying when they had been paying, and now they
see,
got to go through all the processes and spend extra money. Now they have to prove that they've been paying,
well,
and
not
it's just.
even. And that's all part of due diligence, right? And what we're doing on the research on the asset before even closing. So I would have known if foreclosure proceedings would have started, but even still, sellers, which are going to be either banks, credit unions, hedge funds, all of the above, they're in the process of lending money. They're not necessarily in the data entry or the management process, right? And so they're not, if anything, they're not going to go forward with the process of foreclosure, which is going to cost them more money if it doesn't necessarily benefit them in the interim, which is why we step in and why we have the ability to negotiate some of these things even further, especially if you have knowledge about what it is that you're looking at and what you're looking to accomplish. So knowledge, as I think I shared in the beginning, is super important in this industry. And if not knowledge, partnering with someone who has the knowledge and who has the experience to be able to do something like that. So it's not uncommon to come across these different situations or these different instances. You just have to know what you're looking for.
Yeah. And I'm all about partnering, mentorship, getting together with communities and getting that information so that you know what you're doing and not just jumping into stuff. I'm all about that. And it's all about what is possible out there and people understanding and knowing that this is actually an avenue. Where do people even look for a note? If you're looking for notes and purchases, they're like, you know how there's the MLS for properties listing? Where are note listings at?
So a lot of the note business is a relationship business. So it would really serve you well, again, to either have a broker, have a mentor, have a coach that has already built the relationships with the banks. And the reason why I say that is because banks are looking for mutually beneficial relationships, right? So unless you're coming to them with a way to solve their problem, and one of their problems is getting assets off of their books, either assets that are making the money or not making the money, because at the end of the day, even if the asset is making the money, they've already built in most of their profit on the front end. So even them selling this asset to you, now they're going to go out and re-lend that money out at a higher interest rate most of the time anyway. So unless you as an individual can come in and present a solution to their problem, which is either, again, purchasing their inventory or having enough capital or buyers in your circle or in your network to be able to purchase this inventory, then you're not necessarily solving their problem. And so if you don't want to make those relationships with the broker or the mentor or the coach that you're working with who's already established those relationships. That's one avenue. The other avenue is there are online marketplaces that you can use. So whether it's a Bigger Pockets or a Paper Stack or a Notes Direct or some of these online marketplaces that offer the ability to purchase notes, again, knowing what you're doing, knowing what you're looking for, and having in mind that sometimes these platforms have to make a spread or a profit as well. So sometimes that profit's going to be built into some of these marketplaces. Third option is also going after some of the more private mortgages. So you're obviously in the multifamily industry. So one example that I'll give is you have a building, right? You own this building, or at least you have control over this building. If you own that building free and clear, you can sell that property to another individual through seller financing and create a note on that asset. And if you do that, there are plenty of people, the mom and pops, if you will, that are out here doing that. You can purchase, or you can reach out to those private mortgages and be able to purchase those notes as well. So there are definitely other options out there. And so it really just depends on the amount of time that you have. And also sometimes the amount of capital, because if you're going direct to banks, make sure, you're a accredited investor and you have money in the bank so that you can actually be of a benefit to them. But if not, then some of the other options would probably be a bit more attainable to be able to get
Okay.
started.
And so I don't want to cut you off, but I have one more question and we got to go.
Okay.
But
okay.
If somebody is interested in this, right?
Yes.
But
yes.
they don't even want to do any of this. Like they want to be completely passive. Like they don't want to do the upfront work and research and all that stuff. They don't know generally how to drive the car, but they don't want to know, open up and get into the engine and all of that. And I know with multifamily, there are syndications where you can invest as a limited partner. And the syndication is almost like a fund, like fund's a little bit different, but it's a group investment. And somebody who's knowledgeable runs the investment. Do you know of anything like that? What if someone just wants to establish a relationship with you, not all these brokers and all this other stuff? Do you have like a fund or something where you're collecting money, you're buying notes and you're managing that portfolio?
So I'm going to keep this short, but this could be this could be a long-winded answer, because one thing that we don't want to get involved with is the SEC. Those are 3 letters. Well, part of the 3 letters that we don't want to have any issues with those folks. And so when we start talking about managing money, portfolios, funds, and all of those things, a lot of other factors come into play. So what I'll say really quick is this. I do work with people one-on-one, whether you want to learn while you earn and get more of a hands-on aspect, or if you just want to have a baseline understanding of what notes are, but then you also don't want to have to know everything in order to get started. Either way, I think a JV partnership can work in that capacity. Now, yes, I'll leave it at that. You can contribute to funds and all of those things. And there's some other qualifications sometimes to be able to invest in a fund, but you can have a JV partnership work either way if you want to be really hands off, or if you kind of want to be hands on off. If that makes sense.
Yeah, I get it. Okay. So any case, people, you're interested, you got to reach out to Lorraine and talk to her. Just have the conversation and see where it goes. Maybe it ends up it's not for you, but you won't know until you actually reach out and have a conversation, right?
Absolutely.
Okay. Oh my goodness, this was so great. I'm so glad I met you.
I'm glad I met you too. This is awesome.
This is I can't wait. Because as soon as I get some more capital in play, I'm gonna be like, all right, Lorraine, let's go.
Get me passive.
I need another stream. But okay, so
wait, don't go yet. Have you been looking for a way to get started in real estate investing, but you just don't know how? You need the Launchpad. It's brought to you by my company, Norvest Holdings. And the Launchpad is a free guide with a ton of resources I've compiled to help you invest into your first real estate syndication. It includes terminology, book resources, video explanations, all the information that you need. Don't know what a syndication is? I got you covered. How to find a good operator, how to even tell if a deal is good or not without having to know how to underwrite it all. It's all in there. The Launchpad is designed to help launch you into the next stage of your investing career and get you invested into your first multifamily syndication as a passive investor, meaning you can be a landlord and own a piece of a large apartment building, but still go about your day-to-day life without having to stop and learn every single detail about what's under the hood and how it all works. The link to the guide is in the show notes. Make sure you sign up today. Again, this is a free resource and guide. And if you have any questions at all, please feel free to reach out to me. Now let's finish up the show.
So our final 3 questions. First, Warren Buffett has said that diversification is protection against ignorance. What do you think about that statement? What does it mean to you? Is he right or wrong? What's that all about?
Warren Buffett says a lot of great things. And what I interpret from this is that we can't put all of our eggs in one basket. Right. And so diversification as being a protection against ignorance is we can't believe that one stream, one strategy is going to blow it up for us. We have to make sure that we have our eggs in different baskets. And yes, maybe one will take off quicker than the others, but at least we're not losing our shirt by going all in with just one strategy. So that's what it means to me, or at least that's my interpretation of it.
Okay, great. And then Monopoly. Have you ever played Monopoly before?
I have.
Okay.
Yes.
I'm waiting for somebody to say no. No one said no yet.
These new age kids probably would say no, but like
maybe, or some other version of Monopoly that's out that I don't even know about. Right. But in any case, so between Baltic, which is one of the cheapest properties, and Boardwalk, which is the most expensive, in your strategy to win or your strategy for life or investing, which one are you buying first and why?
This is a really good question, but I'll probably buy Baltic first. Although it is cheaper, in my experience, people land on it more. So I have the ability to make more money, even though it costs me less than on the off chance that somebody lands on Boardwalk and maybe by the time they get there, they can't afford the rent or whatever it is. I'm just throwing them in jail. I'm still not making any money. So I would say Baltic is probably the one I would buy first.
All right, great. And then also in your plan, like all the things that you're doing, very inspirational. It feels like this just can't be it. You have to have something else. What else is in the future for Lorraine Millington, and what are you planning to do? And what resource do you need to really take yourself and your business to the next level?
So I have a lot of goals in my timeline, if you will, of things I want to accomplish just with all of the businesses. But a lot of it, and this is going to be, I guess, kind of cliche, but it's really freedom. And so again, when we're thinking about, financial freedom and all this, it's really time freedom, the ability to do whatever it is I want to do whenever I want to do it, but still have my businesses running without me there. So I would say that's really what I'm working toward, just in all aspects of what it is that I'm doing. And for me, in order to be able to get there, what I think is super important is it is coaching. Regardless of what level we get to or what stage that we're on, we're always, or at least we always should have a mentor or a coach, because there's always someone that is ahead of where you're trying to go. And if there isn't somewhere where ahead of you trying to go, then maybe we need to expand our circle a little bit more, because there's always someone who has done whatever it is that you're trying to do or whatever you're thinking about doing. And that's the room that you need to be in, because the only way we're going to continue to grow and elevate ourselves is if we're constantly being surrounded by people who are doing or going where we want to go. So I would say that.
Okay, perfect. I love it. How can people reach out to you? I know we'll have your links and social media and all that in the show notes, but what's the best way for people to reach out to you? One, if they want to learn more, if they want to talk, have a conversation with you and get interested, or just check you out some more.
Absolutely. So my company is Melanin Homes, and I certainly welcome anyone who's listening to go to my website, melaninhomes.com. I do offer a free consultation to speak with me directly, so we can talk about notes. We can see if it applies to your situation or what your goals and your objectives are in relation to investing, to see if notes fit. So I definitely welcome you to do that. If it's maybe you're not necessarily sure what it is you want to ask or what you want to talk about, you can certainly send me an email, Lorraine@melaninhomes.com. And I'm sure all this stuff will be in the comments. And then lastly, for some folks who are newer to mortgage note investing, I share a lot of free information either on my YouTube channel, which is also under Melanin Homes, and I offer a free webinar monthly where I go more in depth relating to note investing. So all of those options and the social media handles, all of that provides a lot of free information relating to notes, or you can schedule a free consultation.
Perfect. Thank you so much. Like, that's a lot of information a lot of resources people can dig into if this is something that you're interested in. I'm all about trying to explore other opportunities and other avenues, because maybe multifamily investing is not for everyone, or maybe stock investing. People have been burned. They want something different, but I still like paper, but it's secured by an actual hard asset. I love that. Yes. So thank you so much for joining us today.
Thank you for having me.
Great. This was fantastic. So much information. People, please reach out to her. Please check out her social media handles, her YouTube, her website, and get the information. Come on. She shared all the wealth today. We got to get it.
Yes, I appreciate this so much. And I love what you're doing within the multifamily space. And for those that are listening, you don't have to pick one or the other. You can certainly expand your portfolio and include both to really share your wealth and build your portfolio.
Perfect. Thank you. And good night, everyone. Night, depending on when you're listening to this, but we'll see you in the next episode, everyone.
Did you love this episode of Share the Wealth Show? Be sure to connect with Nicole by following her on LinkedIn, Instagram, or Facebook. If you picked up any of the gems that were dropped by today's guest, make sure you not only put them in your bag, but if you know of someone who would benefit from this information, don't keep it to yourself. Share the wealth and make sure to leave us a rating and review. We'll see you for next week's episode. Subscribe so you'll be notified.